Well, Pat, I didn't plan on waking you up from your nap because last week I said that. No, wait, that was my nap. That we weren't going to do a show this week, but there's a lot of numbers that came out and economic data, and I just wanted to touch on a few things, or I just couldn't wait another week.
I know. I was like asking, like, you want to do a show? I'm like, yeah, there's some things I want to talk about. So
Yeah.
this is your format.
So we're looking. I want to talk pricing and I want to talk inventory because there's a lot of debates over how many homes are being added and how all these new listings are coming on. And some of these charts are going to make your eyes hurt because in Excel spreadsheet. So I'll ask for a little bit of patience when I show that, and I'm going to explain it. And you'll probably just have to hear what I'm saying because when I show you an Excel spreadsheet, the font's going to be small. I'll blow it up, but bear with me. So the discussion is in inventory levels, and it's all about supply and demand. But how do we get there?
Yep.
And because you can see here that it's going up. So you see headlines that say, inventory is exploding, inventories jumping up, venture consulting, record inventory increases. Well, okay. And you can see now I pulled up here. I'm removing 2020, 2021. I suppose I could add 2022 back there. And I'm going to talk about this increase right here in just a moment. But for this discussion, what I want to show is that, and I'll go back to 2015 and 14 and 13. And what I want to show is seasonally in our market, our inventory new listings, active listings tend to go down the closer we get to summer, tend to go up at the end of summer. Why? Because it has here, all these years, except for 2022. You can't argue with that. Now, we could end up with different numbers this year and go, okay, well, this is the summer that bucked the trend. But one of the things that I look at, and that to me is the driving force for increasing the number of listings that are on the market is, good evening, Renee, is the fact that sales have dropped off. Now, this is my busy chart, and I'm going to blow it up here for a minute. And I'm going to show you a couple numbers here. So I'm going to go to this view. Well, that didn't work. I want to view normal. I want to zoom in at 200% here, and I want to show you some numbers at the top. See these yellow graphs here?
Yeah.
That's the number of new listings, net listings. In other words, new listing, back on market. I subtract canceled and I subtract expired. So we have a net pool of new homes on the market. Now look at the average of new listings, 33, 34, 33, 35. Okay. This is from January of this year to now, 35, 35, the highest 36, 36. Now we're back down to 33. There's no exploding numbers. What's happening is now look at the gap in sales that we had here. Look how low our sales were, 22, 27, 24, 24. That's January. So we're always slow in January when it comes to new contracts until the end of January, and then it picks up. And then you'll see some seasonal up and downs, like this is a holiday week here. That's why that happens. Today, it's weird. 1522 new listings. We had almost 2,000 expired listings over the past 7 days. Those are people that listed and it didn't sell, and they said, okay, well, we're going to let the listing expire. And that's where I'm saying, sellers, that's going to be the story of your life if you don't price right. I'm going to show you.
Didn't you predict that? You predicted that in November, December.
I thought it was going to happen at the 1st of April. It rolled over and didn't happen until the 1st of May. So their listing agreements were a little longer than I thought. Now, take a look at these numbers here, Pat. We're going to call it the mid threes, okay, for new listings. And then we're going to say, because it is, that our contracts are roughly around 3,000. So it's the gap between the mid threes, 3,500 and 3,000, that's adding 500 new homes per week on the market. Now, let me go down to another graph I just made this morning and show you. This
What's
is,
impressive is you made this graph. You made these graphs. That's
I
impressive.
made these graphs. Yes. This is last year, Pat. Now, see these big blue lines? This is the number of new listings. Now, remember the other numbers I was reading you, like 35, 36?
Yeah.
Look at last year, 36, 37, 35, 37, 38. So this year's not exponentially larger than last year, is it?
No.
Look at the
Obviously not.
difference in sales, though. 41, 41, 40, 45. See, there were more sales last year. For the majority of the year, with the exception of a few weeks, the number of contracts were slightly exceeding the number of new listings. And that's important because now that sales have dripped off, new listings are coming on at the same rate, albeit a little bit slower than last year. But because sales have dropped so much, we got more inventory.
Yeah.
You can see on the ticker this morning, there's a the difference is 1,152 contracts between that and listing. So I look at now and I say, okay, well, seasonally, we're going to go down in the summertime. And so I'm going to pull up a chart here that shows you new listings by month. And here is, and again, I'm going to see if I can make this a little bit bigger. So I know 40% of our viewers watch this on their telephone. 34% of you are watching Pat and I on the flat screen, the big one, the 40 inches, Pat. So got to look your best.
Yeah. Okay.
Yeah. So I got to look your best. So each little line here is a month, right? Okay. So let's look at last year. So new listings in May were about 8,000. April, they were 88.93. So this year says here that March and April is about 96.52. So we went up about 800 according to this graph. But last year we dipped down in July. Okay, see these? May, June, July. Okay, the year before that, see this? May, June, July, down. Okay, wait a minute. What's going on here in 2022? May, June, July, they went way up. We came down here, came down here, came down here, came down here. What happened then? Why did we go up? That's when interest rates popped up. They popped up in April, May, June, July, August. New listings came on. Came like crazy, mostly driven by Open Door and OfferPad. And by the way, Open Door stock today is 74 cents. Ooh.
Oof. Wow.
Ouch. Ricardo, had a bunch of houses I had saved go pending just today. It's not as bleak as we think out there. Higher for longer seems to be higher for a lot longer. Yeah, the rates, they're kind of sticking there. Now, let's look at pricing, folks. Average list price per square foot was way up in the stratosphere at 2024, finally started to come down. People got optimistic coming in the new year. Now the average list price is starting to come down a little bit, and the average sales price is coming down. There's still quite the gap. You can see here at the average sales price, $300 a square foot, and the list price, $360 a square foot. But going through listings, we're going through listings of the listing appointment today and looking at comparables. And comparables are your neighbor's house. It's just like yours. It's sold. What did they get? Okay, I guess that's what I can ask for my house. So, Pat, if I go next door to your place and the house is exactly like yours and they sold for $500,000 last month and everything's the same, can I get $500,000 this month?
Simply no. Right now, not in this market.
Yeah. So when you read and people go, my comps are good. No, well, no. Your comps are showing you what happened last month.
Yeah, last 30, 60, 90 days. Yeah.
Yeah. So so if it closes in April, that contract was written at the first part of March. So it's even slower.
Yeah. Yep.
When you're looking at pricing, there's a lot more to look at too. So like today we were going through these listings, these homes that sold, and I looked and I go, okay, they were listed at 585. They sold it at 565. Okay. Then you scroll down further on the MLS sheet. Oh, and they kicked in $9,000 towards concessions. I saw one that had $27,000 in concessions. So you've got the list price, they drop the price it sells, but then you got to find, and you can only see it on the MLS, is how much they gave up in concessions and a rate buy down or contributing to closing costs. And it's pretty extensive. Now, looking again at pending listings, looking again, I haven't put it up yet, but we're just mirroring last year, slightly below last year in pending.
Mm-hmm.
And the same way with contracts or under contract. Under contract, pending are kind of the same thing. But Bebop says here, condos are getting obliterated all over. Condos are having a tough time. You are correct. Ricardo here says, I wish I had comment sections tired of the 1,000 price cuts on houses that have been on the market for a few months. Well, that's hence my headline. It's time to get real here. So if you're going to price your home, if you really want to sell it, a lot of what we saw since January, Pat, I think we're just 1,900 people kicking the tires.
Yeah. Totally
thinking because of the false conversations out there that we were going to have 4 to 6 rate cuts. Now, I don't want to say it's all false because, a lot of people in the bond market thought it, but it didn't happen, did it?
No, not really. I mean, today, the markets have been playing around today. The 5.5% coupon was down 21 basis points. We had the PCE numbers come out. I mean, basically, 0% change over, 0% change month over month. I mean, we're kind of trending in that low 2% inflation rate range. We got the jobs coming out tomorrow. So, it's going to be the inflation seems like it's trending down. Obviously, once again, we're just stuck in this rate range of high sixes. Right now, we've got, like my best price lender, Provident. We're sitting at 6 3/4 for basically no cost. So high sixes, no change on rates really. I mean, once again, we're stuck in that darn channel. And, if you look back over the last 5 years, I mean, people are saying, well, rates can go up. We saw that one in October 1st of 23. I mean, they hit 5. Ever since then, we've been stuck in this darn channel. And I don't see a lot of rate relief there. I mean, my personal opinion is just reading the headlines, the tariff talk. I mean, we're going to be stuck in this story for the next 3 to 6 months. We went from, if you go back the last couple of years, we went from the inflation talk to all the Fed talk. Now we've got the Fed talk and tariff talk kind of mixed in together. It's going to be a wait and see.
Nothing's moving the bond market, though. I mean, You got a GDP number that came in lower, and the bond market traders went, okay. Yeah, of course, there's a lot of noise inside that GDP number, but then you get the jobs report come out, and the bond market goes, okay.
Yeah. That's the thing. That's why watching the 10-year Treasury, the activity on it, day by day, week by week, month by month, you can really see we haven't gotten a discernible trend yet. I mean, it's been stuck in this channel, but my overall feeling is that this tariff talk is going to paralyze business, their decision making there. If you're to weigh a rate's going to go up or down, I think there's more that's tipping the scale that rates are going to stay in here and maybe trend a little bit lower. But we're going to have little pockets. If people are looking at talking about refinances, I mean, we saw a couple pockets for only a week or two back in October. September, I think it was September. We saw that dip. We saw a little dip here recently, not much, but so it's just kind of wait and see. I mean, I pose that question to you. If rates were at 5.5 today, I mean,
I think both listings and new contracts would go up. I don't think that new contracts would go up and surpass new listings and cause more pricing upward pressure. I just think they'll both rise. Yeah. And Bebop's saying inventory is going up over 30,000 this summer. Well, we're bucking the trend this week. It's going to go down considerably lower by about 800 homes. But seasonally it comes down. So that remains to be seen. And Renee here is saying that Airbnb and VRBO industry will be hit hard this year. There's certainly a lot of chatter that we're seeing in the Las Vegas numbers that the travel to Las Vegas is pulling back. So I think that's probably a very real thing. Now, talking about our real estate market here, when I look at these lower sales and I look at softening of pricing, I'm not disturbed by that. I mean, we're busy. Well, in fact, we're having a really good month, and it's, because there's more choices, and I'm not opposed to, oh no, I'm a real estate agent, prices are going down. So what? They go up and they go down all the time. And so it's not stressing, oh my God, my commission's going to be lower, you poor guys. All right, think what you want, having a good month, getting more inventory and prices softening, and maybe we can start getting closer to affordability. That's not bad news.
Yeah. No, I think the overall climate, I mean, obviously it's very touchy, it's news driven every day, every week. Remember I posed to you last week, I said if you had a house to sell, I mean, people are obviously maybe looking psychologically. I don't know if this will help anybody. This is my own little theory that I came up in my own track driven thought process. But, if you're a buyer, you're looking to sell a house, you're looking to buy a house. I mean, the ideal thing would be to get the top price for your house selling and get a bottom price when you're buying, right? That's just not going to happen. I mean, if you've got, I got to thinking, I mean, if this gives anybody solace, I hope it does, maybe in this little words of wisdom. If you're looking to sell a house and looking to buy another house, all boats rise and fall with the tide. So yeah, you're not going to get top price for your sale, but also you might, on the flip side, if you have to roll off $25,000 on your sale of your house, you might get $25,000 off the purchase. So I don't know if those words of wisdom help anybody. It's just I think it's something people have to kind of, because people do want to get top dollar when they sell. And they want to buy at a bottom, but if you're looking to buy and sell and buy something else, it's just not going to happen. Unfortunately.
I interviewed a gentleman. He's a chief financial officer for Monarch Equity Partners. They specialize in loans for Canadians buying houses down here, and I'm going to air the video Sunday night. You'd be surprised how busy they are. I thought everybody was leaving. Everybody's going back to Canada. One of the things he said, he goes, look, 50% of Canadians right now are mad at the United States are not coming back. 50% of Canadians are mad at Canada and are probably going to leave. To your point, the value of your house is going to go down. The value of the house, the one you're buying, is going to go down. It just keeps going on. There's a question I can't answer. Bebop says, what are we expecting to hear from the Director of Federal Housing? Pulte announcement coming next week. I don't know. I haven't followed that. I don't know anything about it. Pandemonium, welcome. Good to see you. We're doing good.
Yeah, haven't seen them in a while, but
in the end, we still don't have enough supply, right? So the road will be painfully slow. Let me show you extremes here in a moment, Stephen. Buyers can see the knife falling in real time now. The FOMO is gone and no one's willing to step up to catch it. Well, 3,100 people are willing to step up and catch it. And so it's not as bleak as some headlines are trying to tell us.
I think it's certainly be a challenging market if you're a fix and flipper. You don't know, what kind of market you've got. I mean, let's just face it, the low hanging fruit, is gone. It's the process is definitely more work. You got more inventory, you get more choices, which I mean, from a buyer standpoint, and you get, like we talked about the last several podcasts or last shows. I mean, there's certainly that market back in the days of you got to write a contract in the driveway. Those days are gone, which is good.
Thank God. Yeah.
Yeah.
Renee, it's Bebop's asking why I don't think we'll hit 30,000. We might.
Yeah.
But it will be outside the norm. In other words, if you just look at the ticker on the bottom, okay, that's going to make this new listing graph hit right about here next week when it updates on Monday. Okay, so it's going to come down a little bit. Seasonally, it will stay flat if we're following things seasonally. And if we don't, then that will be out of the ordinary. And that makes me say, I'm not confident we're going to hit 30,000, but I'm not ruling it out.
Yeah.
We may hit it. I don't know. And then looking at extremes, I want to go back to that for just a moment, if I can find it here. And this is, what's the worst we've ever been? What's the best we've ever been? Okay. So this is, if you look at active listings, guess what our typical active listings are? 26,454. Where are we at today? 26,166. So if we do hit 30,000, okay, alarming, catastrophic, falling knife, all depends on the gap between that 30,000. And if our contracts are still hanging at 3,000 a week or below, then yes, more pressure on prices on the downside. Gradually, not extreme. Now, if we get to 50,000 listings, which I don't see any reason why that's going to happen, then yeah, you're going to see a lot. But if you look at pending listings, the low of pending listings is 3,000. Well, that's where we are now. We're already there. So it's an interesting number when you look at years past and the extremes. And Renee, thank you. Says updates are fantastic. Grateful and willing to share your time and data with you. Yes, I'm. I almost didn't come on today. I appreciate that.
You have a glowing personality due to your radioactive material that's in you right now.
I am radioactive. Yeah, one of my friends says, "When can you shoot lasers out your eyes?" And I said, "The doctor said that that's not going to happen. But if I were you, I wouldn't walk behind me."
Well, glad to see you're doing well based on your treatments.
I am over the halfway mark officially today. I've had 16 treatments. I only got 12 more to go, and I'll be done. And then we do a little scan in June to make sure all the little problem childs that are in there are done, and I am done. So I'm looking forward to June. Clayton says, working on a 24-month bank statement, non-warrantable condo, 10% down, and the guy has a ton of investment properties in his name, $170,000 deal, low fruit. Yeah. Jeez.
Non-warrantable. Good luck on that. Yeah, it's non-warrantable condos. Condos. I just closed this deal today, but I'll tell you,
it gave you a heartache.
Oh my God! What's funny is there was one line in there. I mean, when agents list a condo, obviously, I hope they do more research as far as warrantable, non-warrantable. But we got stuck on this. The lender was stuck on. There was this one clause in the guidelines. Guidelines are like 170 pages long, and it can be one line. And basically, Fannie Mae and Freddie Mac says that the insurance policy has got to have what they call an inflation guard on the replacement cost of the condo. Well, they didn't have it on the policy, but they did have it. It took us a week to try to get the answer from.
That's the frustrating part.
That's the frustrating thing about condos. There's so many little intricate details as far as insurance. Like I said, and the HOAs, I swear to God, they're run by the mafia because they will hold us ransom to HOA, these fees. I saw one Josh Lewis on the Jeb Smith, and they're in California. He was talking. I was watching him a little bit, and he's like, these HOA, these associations, they work pretty much part-time. The board of directors, everything's part-time. We want information. And if we ask for like a HOA certificate, HOA cert.
Yeah.
They'll say, well, it'll be $600 and then you'll get that in 10 days. Well, we need it in 3 days. Well, that's going to cost you $900. It's like they hold us ransom to this crap. And
it's on their computer. It's a file and they just attach it.
I mean, the listing agent, not to get into these little war stories, but I'll tell you, condos, you got to do your as I professed the last couple of years, you got to do your research, because I literally drove down to the HOA community, the manager, and it was kind of funny because she had to fill out this one form. They didn't answer. I said, well, hey, I gave her the form. She goes, oh, I'm sorry, but HomeWise, another third party in Florida fills this out. And then what they do is they fill it out and they send it back to the HOA. And I'm like, who? It's mind-boggling. It literally, I would rather stick pins in my eyes than what I went through the last week just trying to get this closed. We got it closed. With the effort of Jessica, the listing agent was great, Ari Schifrin, from Good Oak. He was great. He was wonderful. We all kind of worked together, and that shows you when a deal goes sideways. If you get everybody working together, the listing agent, the buying agent, the sellers were, they're patient, and we brought the deal together. But it wasn't somebody yelling and screaming on one side. We all kind of like, hey, let's put our heads together and figure this out, and we got it done. So it's it was interesting. Learned a lot. Like you said, one little line on that in that guideline, and the lender said, sorry, this is really the warrant. It's not a non-warrantable condo right now because this inflation guard's not on it. So it got really ridiculous.
Well, look at Clayton. You're saying, yeah, the buyer had to pay $500 from HomeWise Docs to get what we needed from the HOA. Why?
Yeah.
Why do you have to pay $500 for a document? Yeah. It's not like they had to hire somebody that week to type it.
Oh no,
it's in a file.
And then like you said, if you want that's in 10, 10, 11, 12 days. But if you want it within 3 or 4, which is pretty reasonable, that's going to be another $400 or $500. I mean, he literally hold you ransom. And the client people don't know this. On the other side, they're like, "What's going on?" And that's part of what we go through as lending. It's just absolutely.
Yeah, they don't see the back end of that. Do you see the question here on construction loans, Pat?
Yeah, construction loans. Yeah. I mean, they really don't. I mean, I've got a referral source that I've been working with this credit union on construction loans. There are some construction. We have some construction outlets. I typically have not done many, so I'd rather refer them out and get them to a good contact that does these regularly, because I don't want to pretend to be something I'm not. So, they don't typically have any tougher guidelines. It's just pretty much standard. You got to go through the hoops, obviously, getting everything approved, but not really. No.
I've got a closing next week for a young couple. It's a beautiful house now with Tukey, and we requested that they leave. They got this big wooden play set, and they got 2 little kids, another one on the way. And so in the purchase contract, we're requesting that they leave the play set. I mean, it's huge. I can't imagine them wanting to dismantle it and take it with them, but they agreed. And then so yesterday we get a message from the FHA underwriters that they wanted that removed from the purchase contract because they didn't want it to be part of the price.
An inducement, yeah.
So we had to fill out an addendum. And of course, now you got to tell the buyers, now we're filling out an addendum that's removing the playground from the purchase contract, but it's still going to stay in the yard. So don't freak out when you get this thing here.
Yeah.
John Oliver episode on HOAs is mind blowing.
Yeah, their HOAs are definitely a piece of work. I mean, like you said, you got to kind of do your homework, or try to do your homework before a condo, because you don't know if they got enough insurance. If they have, the deductible, if it's 10%, it can't be 10%. It's got, the deductibles are kicking lenders in the butt right now. So anyway.
Yeah, Terry, I don't think we're going to be 2008. In fact, we may even remember how we banned.
God, Terry, when's Terry going to stop being a doomer gloomer? God, come on, Terry.
What word did we ban a couple of years ago? What was that? Crushing it.
Crushing it. Yeah.
Terry,
we're not crushing it.
We're going to ban 2008.
Yeah.
So we're just, it doesn't.
Oh, Terry.
Sun City HOAs are worse. They fee you for everything when closing. Boy, you got that $5,000 to $5,300. Same with Sun Lakes, capital improvement fee.
Yeah.
In other words, they're just continuing to build this fund so that they can improve the clubhouse later. It's so they get it from Terry's a crash bro. So you got to start your own channel, buddy. So I want to see it. What are you going to call it? Reventure Consulting got quoted on Newsweek today. So what about 208.5? Yeah, we'll make it a version, Richie.
Yeah.
Per unit deductible is making tons of condos untenable now, unlendable now. They just took
they're going to have to do. I saw something in Florida. Florida's doing something in terms of these assessments that they're doing, because it's going to be condos right now are just getting, smacked around. I mean, it's they're going to have to do something from a legislative standpoint to just loosen up the guidelines there, because they're basically using the same guidelines they use in Florida that they do in Arizona and vice versa. We don't have, we've got some downtown, we've got some 30, 20-story condo units, but it's certainly, something's going to have to change there.
Yeah. It can't stay the same what it is right now.
Yeah.
Read a question here from Bebop, saying, what's happening to list prices 300 to 500,000 range, also about the volume of price changes. So here's the list price, and let's go to 300 to 500,000, and I'll find it down here. I'm going to remove all and go between 300. There we are there. Oops, I'm missing one more little checkbox. Not as easy to move this mouse as I thought. There we go. One more. Boom. Okay. So they're pretty much staying flat. We had a little dip going down here in week 11. They're back up to $240 a square foot. And then the question was the price changes, price reductions in that amount. Let's see if I can pull that up, and which would be talk amongst yourself. Here we are, price changes. I think that lets me filter it by price. Yes, it does. So I'm going to do this again. Pull out. I've got this on another monitor. It's over here. So I'm not ignoring you folks. I'm just momentarily looking away. I pretend I can see you all the time. I see things anyway. Yeah, their price changes. Look at that. There's quite a few compared to years past. So the 300 to 500,000 people were kind of saying Yahoo, and then they ended up saying, oh no. Terry here says, I'm not a crash bro. I'm a bottom feeder. Own it, Terry. Own it. Great data, guys. Thanks, Bebop. Also, can you see the Cromford team's commentary? I can. I tend to not put it up here. I do include it in my newsletter. So if you haven't signed up for my newsletter, shame on you.
It comes out what,
Monday morning at 7:00, and I put the commentary in there. The reason I don't put it up here, I will occasionally. It's just really hard to read.
Well, you do it sometimes.
Yeah, it's kind of hard. It's if I look at recent news and commentary, I mean, here's what it looks like, and it makes very boring TV. Sometimes I'll highlight some of the things that they say, but like I said, over half of you are watching this, live on the phone, and if I put that up, it doesn't mean anything. I just have to read it out loud. I have taken portions of their commentary and put it in the ticker down below, and found that was people like that. But I include in my newsletter the commentary on what they say on the CMI table. So make sure you do that. We have 200 people now that have subscribed to the newsletter, and we don't spam you.
No,
not
even
at all.
Even if you ask for a property profile, we don't spam you. If you're looking for kind of a breakdown on your property, the comps have sold. Those property profiles they still show you what kind of selling in the area too. It gives you data and information on your house in your area.
Yeah, and it's what appraisers use as well, right?
Yep. Yeah, I mean it's just good, more information, to see where you're at. Because I mean the average guy doesn't really, that property profile doesn't really. It provides information that you're not really going to find on your own. You'd have to do a lot of digging.
Well, interesting one looked at this week, pulled up. You sent me the Canary report. I looked at the amount was in the low fives. Okay.
Yeah, that's right.
But that's the range. So and I really try to let people know, look, this is the range.
Yeah.
In bad days, it'll be, 425. Today it's 540. Okay. And now we have to look at what's going on. So you got to do a little more deep diving into that. So I went to Zillow because, they know what they're doing. They're accurate. And $740,000 is what they had this house at, this estimate.
Yeah.
So the 2,000 square feet in Gilbert, nice house. It ain't 740. I thought, what the heck? What is this? Maybe they're seeing something in the back I didn't see. And it's how can this possibly be this far off? And that was a shocker. And we went there today, and he goes, "Yeah, Zillow's got me down to 650,000." I said, "So they dropped 100,000 in 3 days." That doesn't happen. So
No.
it's pretty bizarre when you look at some of that stuff. I do like the Cromford report because you can just get drunk in their data. I mean, they've got so much stuff. And so I try to get on a few hours before we get on and just kind of cruise through it and see if anything pops. And then at the same time, I try not to be a parrot because I know there's a lot of YouTubers in our market, Caitlin, Sean, everybody, they're sharing pretty much the same information. So I try to take a little bit of a different twist and maybe find things that they didn't talk about. And so that as you are jumping from channel to channel, you can at least count on something different. I mean, I got to do something because I'm not that good looking, you know. I mean, I look at what Caitlin has. You know, I have to have data. So this is your canary report here.
Yeah, that's the canary report. I mean, it basically shows, it gives you kind of a range right here. Median 556, 628. This is for Chippewa Place and Chandler. I mean, it gives you kind of the comps, what's sold, the highs. Is it the similarity is high? Just gives you kind of a good breakdown. I've got another one that's actually has pictures. Gives you the gross living area, the homes that are how big they are. It just gives you kind of a good breakdown of your home.
Now you're from Wisconsin. Is it Chippewa or is it Chippewa?
Chippewa.
Yeah. No, I went to Chippewa. They told me it's Chippewa.
Yeah. Okay. Chippewa. So
19
if anybody
old,
wants this report, though, I mean, it's a good report. I mean, it's gives you some information. So
yeah. No, I won't send you that report if your home's already listed. That'd be a
yeah. You can't cross. Yeah, you can't.
Yeah, I can't do it. I mean, I'd like to. I've had a lot of people ask me, "Hey, my house has been listed. It's not selling. What can you tell me?" And I can't. It's an ethics violation.
Yeah.
It, and same with the canary report. I would get that would be the one time a realtor actually calls me back.
Yeah.
We have does Cromford track rentals? No. Well, not really. I just saw the first promo in Scottsdale for 3 weeks off. Yeah, Bebop, they're just getting warmed up on that. We've been looking for rentals for a young man, and it's amazing what you find. But they kind of track. See, the problem is a lot of those rentals, like what you're seeing there, they're not on the MLS. So there just isn't a lot of data to glean. You can't get it. Rick, good name. I have builders texting saying discounts and ending texting saying rumors, prices going up. Yeah. Rumors. That's a song. That's an album by Fleetwood Mac, right?
Yeah, that's right.
Shout out to Ari.
So Ari, yep.
Ari. How are these apartments able to have such high vacancy rates? I don't know what their vacancy rate is. I asked one and she says, "Oh, I think we're about 10%." And she didn't know. She honestly didn't know. You have here, I want the entirety of Real Page to walk off the plank. Real Page. I'm not familiar with that, but the rental market, I mean, you just drive around and look, they're getting pretty saturated. So they're going to have to be competitive. So they always start, and a lot of this stuff happens in 3-month increments. So you start seeing the 1 month free, you start seeing free this, free that, no first month, just a $500 deposit. Then after they've exhausted all the goodies, then you start seeing rental price reductions. But as I was stated at the show last week, man, they have one fee after another. And the one I didn't like was it's a small amount, it's $100, but they said, you have Wi-Fi, it's $100 a month. And I said, well, who's it with? She said, Cox. I go, can we change that? No. So we can't go to Verizon. It's $25 a month. What if we don't want Wi-Fi? No, it was $100 a month. It comes with the unit. So I went and looked at the unit, and there's the Cox panoramic Wi-Fi box sitting down there. Now, I have Cox. I love it. It's high speed for me. In fact, they just upped my upload speed to, what is it? To 100? To 100? My
Yeah.
download speed is almost 1,000, so it's pretty wicked and quick. Pandemonium here says you can prevent rental price decline for a long time with freebies, goodies, and spiffs.
Yep.
You can, but it depends on what your neighbor's doing and stuff. You know what the other complexes are doing, but it, if it gets really ugly out there. I mean, we look at the shift that we had though. People were moving into apartments to save money to get a house, and you had the clubhouse and the barbecue units and swim pool, and you didn't want to leave, and COVID comes along, and now you can't use any of it.
Yeah.
and they mail you, the government automatically deposits a $1,200 check to your bank account. Let's buy a house.
Yeah.
So everybody did. Vacancy rates exploded. Oh yeah, this Wi-Fi and valet trash mandate are huge profits for the property. Yeah, you pay $25 to $45 a month to put your trash outside your door, and they got these companies that come along starting at 7:30 at night and pick up all your trash. And you don't have the option of saying no. I can go ahead and walk that to the dumpster because they lose the money. Terry says, I'm attending the Letitia James School of Investing.
I'm not going to go there.
How much is that? My son was looking at apartments in Tucson and wasn't finding lower rental prices. I wasn't finding that here last week. I was kind of expecting it. And so we kind of started shifting and going to the MLS and looking for privately owned condos where you tend to have a little bit more negotiating power. You go in these big complexes and the price is the price is the price. And you get individual condo owners, you got wiggle room.
Mm-hmm. Yeah.
So you can ask them to make improvements and stuff. This one that we looked at, I said it was owned by this company. And I said, this should just be a condo? She goes, yeah. How could you tell? I go, well, the one we walked into is all custom. They got different flooring. And there's nothing uniform about the 2 units that you showed us. That tells me it used to be a condo. So anyway, it's the one time. Well, that made me write twice this month. Pretty good.
Oh, you're right more than that. Come on, buddy.
I'm going to run with it. So Clayton here says again, forget to mention, I just moved out of Optima Camel View after 8 years. Wow. About 50 units for sale. And there's 40 for rent right now. Building is old and HOA fees are still high still. That the one thing about that, Clayton, and you know this, I went there to show, for people that don't know, the Optima, it's when they first built, is really cool. That's
it's a fish bowl. It's a fish bowl. You can see everybody in there. Everybody others kind of. You look like you're in a fish bowl.
Yeah,
right?
yeah. It's all glass, all facing the inner courtyard, and there's several different inner courtyards and pools, and they've got these penthouses. They have all the outdoor trees and shrubs and stuff, and you drive by and go, wow, that place is cool. Well, I was going to preview a unit there once, and so the lock boxes are in this part of the parking garage where there's this big gate, and all these lock boxes are hanging on this gate, hundreds of them, Pat, and they're not in alphabetical. So the agent takes their business card and tapes it to the back of the lock box, the unit number. And so you gotta look, it's good 20 minutes to find the damn lock box. Then you find that, then you got to find the unit, and there's no rhyme or reason to it. Like building C, unit 413. You're like, so you got to count. If you're going to show something in the Optima and you're an agent, go there a good hour before your appointment and then study the place, because it's really hard to figure out where everything is. It was
not cheap to live there.
Oh, it's not cheap to live there. And it is. And they've got one that's just a rental unit on Camelback, and they built another one up in, what's the name?
North Scottsdale.
Kierland.
Yeah.
Yeah. So they're kind of cool, and they're really expensive up in Kierland. Like they're all over $1 million. So, well, I'm glad you got out of there, Clayton. You got out of that fish bowl. So, well, Pat, I will see you next week. We will be back again.
See what happens with the unemployment numbers tomorrow. Comes out in non-farm payrolls, and then we've got the Fed coming up next week. We got the Fed on. Let's see here. Let's see. We got next week. We've got the Fed. What day is that? That's Wednesday. Yep, 2:00 Eastern time. So, see what the Feds have to say.
All right. Sounds like a party. Everybody will be all ears, including the president.
Yeah.
Should be fun. All right.
Yep.
Take care, everybody. See you
All
soon,
right. Take
Pat.
care, everybody. Have a good one. Thanks for coming.